Red day for the market got some major drawdowns. SP 500 chart damage. Dow Jones chart damage. QQQ chart damage. Russell 2000 major chart damage. Today we had the Fed interest rate decision, and Jerome Powell came out and gave us the go ahead that we were missing a recession, but yet the market still came down. People are very fearful, but should they be? Here we have the averages, SP 500, Russell. There's a lull between 11th through the 17th of December, and then usually there's a Santa Claus rally that I know you probably everybody's already heard of. Is this going to be the same Santa Claus rally, or is this something more to be worried about? Got to keep this in mind too. As real yields go higher, the dollar generally goes up, and that's bad for the market. So let's look into these charts and see if we got anything to be worried about. Here we have the SP 500. I'm using the proxy SPY ETF. The current price is 586.28, and today was a drawdown of 298 basis points. As you can see here by this gray box, this was the range for the expected move, and we are well out of that. So usually stock stays within this range 60%, 68% of the time. So I would probably expect some backfilling. I also don't see too much technical damage. This is the previous low, and we haven't made a lower low yet. So following trend, but the momentum's bad, and that's some heavy volume for the day. But I will see some backhand filling, at least into the lower expected move here at 596. But so far, we're still in an uptrend. I wouldn't be too concerned about it. The Christmas rally is still in play. Here we have the Dow Jones. I'm using DIA as the proxy. Today's price ending is at 424.22. And it had a drawdown today of 261 basis points. As we can see, Dow Jones has been trending down 9 straight days and then went under. Momentum, very hard negative, and volume was high. But same thing as, oh, wait, before I spoke too soon, we do have chart breaking. That is a lower low on the chart. So Dow Jones, don't see that center rally. It might float, but it won't go to a new high. If you believe in trend following analysis with higher highs and higher lows, until we beat the previous peak, I think this is on a downtrend going down. But this was an extreme move. I think we'll potentially go back up here. The lower expected move right here is 432, 433. So we should see a backhand filling up to there. But Dow Jones is definitely on the downtrend, and I don't see new time highs coming by the end of the year. Moving on to the NASDAQ 100. I'm using ticker symbol QQQ. The current price, the end of day close was 516.47, and it had a monstrous down, 361 basis points down. Now at a quick glance, this was the previous low, so there's no really bad chart break or chart damage. Was a major move down. Had a big drawdown right here. Volume, good volume day. But the momentum just turned over because it's a really hard day. But like I say, just like the rest of my expect, backhand filling and the Santa Claus rally should go into play still for this one. It'll be easier to get some backhand filling on the price action going up because it's not that far out of the weekly expected move. Got the price at 520 or 521 ish. Definitely see the price getting back within that unless GDP comes in pretty bad. Let's run through small caps. Here I have the Russell 2000, ticker symbol IWM as the proxy ETF. The closing price today was 220.84, and it had the biggest downturn with 443 basis points downwards. Just like Dow Jones, it's been a consecutive downturn, and this drop is monstrous, way out of range. And I can just tell by looking that this is a much lower low than the previous one. Even filled the gap in this area. Prices crashed through the 50 MA, 100 MA, and almost going down towards the 200. Good size volume bar and strong negative momentum going down. I'm not sure with this one. This is a large move. I would play bounces down for the short after this. Price, that's a lot of way to make up to get to this 227.83 or 228. Expect to move for the week. It's a lot of people on the opposite end of that. So that'd be a lot of backhand film. That's well over 50% to get back inside this range. So we want to keep our eyes peeled for the Russell 2000. As we were talking about before with real yields, here I have the US dollar proxy DXY. The current price is 108 and like 2 cents. Had an up move of 113 basis points. As you can see here, price has been running, broke the 200-day, retested, and then continue to go higher and higher and higher. Momentum shifted, and it's going back upwards. It went negative, now it's going back positive. At the same time as we had negative momentum, price basically went flat and sideways, and that's a strong sign for upwards. And then also the moving averages is just basically catching up, building up energy to explode. And now we are at all-time highs recently within a year. Let me check that. Yep, for the whole year, this is all-time highs. Let's get back down in there. This is definitely not a good sign for equities if the dollar starts to continue to rip. And the momentum is starting to turn back up. So I wouldn't chase this price action up. I'll wait for it to go up some more. Momentum shifts over kind of like here, and then buy back in as momentum for the dollar somewhere when the momentum weakens or when it flips. The flip price would have been right here, so that would have been a good entry. But as long as dollar goes up, I see more weakness for equities. Moving on to precious metals. I got gold futures contracts as the proxy for the spot price. Right now, the current spot price is 2622.3, but it's still moving because futures moving after markets. The total down as of right now is 118 basis points to the downside. In gold, we can see price and momentum. So the volume is not too bad, but the momentum is definitely shifting back. So we were positive here. Price went sideways. Did not make a higher high to this peak, and it's starting to roll over. So that's always a bad sign. Now we have to look on the lookout for a lower low from this point. And that lower point is 25.41 in that range. As you can see right here, prices are already starting to backfill. This was the close of the day. And now we're already starting to backfill in the aftermarket, going back to the expected range. Just like this is what I believe is going to happen with all the equities, and that price range is 26.22. So yeah, we want to get back within this gray area between the expected ranges for the week. But yeah, precious metals like it's going down, and that's not surprising given what happened with the dollar. It's going up, so usually Gold goes down. Right now, we're sitting at we got a strong hold. Price is sitting at the 100-day moving average. Well, close by it. So maybe we can see some bouncing sideways chop. But as of now, if the dollar keeps going, I wouldn't be surprised if we make a lower low. Keep going, maybe even touch the 200-day and start a new downward trend. And the 200-day moving average is at 24.86. Not a target I would take right here, but definitely something to keep the eye on. Bringing up the rear for cryptocurrencies, we got BTC futures. I'm using this as a proxy for Bitcoin. Right now, it seems that we are at 99,525. And I believe the market's still going. So currently right now, there's 133 base points drop. As we can see, the price was going sideways, and then we had the momentum, negative momentum, starting to weaken and strengthen, but now it's starting to get stronger. So maybe we can see a downturn. But we got strong levels in here. There's a lot of cement supply and demand right here. So maybe just hit bounce up. Nothing to be too worried about. And the lower expected move, weekly move, was at 95,000, 96,000 ish. Give or take like $10 for Bitcoin. $100 isn't anything. So we're well within, price is well within the range of expectation. So nothing to be worried about. The previous low is all the way down here at 66,000. So no chart damage really broken at all. Price still well above the 50-day moving average. All this demand zone right here. Nothing to be worried about. Just keep an eye and see how much farther it goes down. But I wouldn't be worried about Bitcoin at all. Actually, if anything, it gives you a buying opportunity. Another major market mover, especially for the SP 500. We have Amazon, ticker symbol AMZN, closing price 220.52 cents, and had a major downdraft of 460 basis points. Amazon has been going strong, low volume, but price action through the roof. This is the previous low. So Amazon chart dynamics is still strong. Price coming down, could test this area, little demand zone, or the 50-day moving average. Momentum is weakening on the MACD, but this looks no more than just like a breather to me. We always want to check the sector to see how that's doing. So consumer discretionary. This is a proxy for consumer discretionary, XLY. Let's get a closer look. Same as Amazon. Major run up all the way up here and just coming down for retest. Good level on here is about 2019 or 220. And that's around the 50-day moving average, 216. And the MACD just starting to weaken. So it could come down, go negative, hit that area, chop a little bit, then go back up for the rally. And that will help our case for Amazon going back up once it hits the area and then bounces back up. So Amazon looks strong. If I was going to make a buy, I'd wait for Amazon to come down, hit this range, and here either 50-day or this little cluster. Momentum return from green to red, and then start the weekend. Look for this or the MACD flip, and then buy back up for the end of year Christmas rally. Like I see the same thing with SPY.